looking at gold from a what I call a 5 diversifier category. I like to put about 10%, look at 10% in the actual metal.
Right.
And I use the market vehicles. I'm not a big fan of the GLD, but there's a couple. Sprite has a couple of entities in the precious metal ownership area where they own nothing but gold and silver. One of my favorites is Sprite. I forget exactly what they call it. I can give you the symbol, but I can't think of the name of it. CEF is the symbol, where they have 30%, roughly 30% in silver, and the rest is in gold. Actual metal, not equities, metal.
Okay.
So there's the 10% allocation to gold or precious metals and silver. Then my second category are the streaming companies, royalty and streaming companies, because they own the actual metal,
right?
And they own it on a low risk basis, where they don't have a lot of the risk that are associated with mining,
right?
The inflationary risk, the country risk, and so on. As one of those companies recently found out, Franco-Nevada had a very large 17% interest in a Panamanian mine. And the government decided to step in and not allow them to do what they had originally agreed with, and the stock has just gotten trashed. But the important part, the point that I want to make there, is they don't have the risk, and they also have the metal in place, so that they're leveraged very nicely to the price of silver and gold or whatever commodity they're involved in. So royalties are the second area. And then silver. I think silver is a very, very important component of the precious metals. And definitely. I think you would have at least 10% allocated into that area. And then I start looking at the production companies, those that are actually producing. And there's some amazing bargains out there.
Wow.
You can look at any number of these companies that are what you would call value stocks. They're selling at 10 to 20 cents on the revenue dollar. They're selling one that I own at about 2 times its EBITDA, or every year it's producing pretty much what its total capitalization is. I mean, they're insane valuations, and they have enormous potential or leverage to the upside of gold. And then I think that's 4 categories. The 5th would be the juniors, or the explorers, the exploration.
Right.
And you want to have maybe a 5 or 10% allocation in that area. But
so you're saying roughly 10% into each of those categories.
Yeah.
Okay.
Yeah.
And then the other 50% of your portfolio away from precious metals and something different. Okay.
Uranium, as we discussed the last time, should be a big component. Energy should be a big component.
Right.
Right now, there's a lot of interesting values around in the oil and gas industry that can be looked at. And later, the food commodities and fertilizers and that type of group. I believe they have some very interesting potential going forward. And the rest of the portfolio, in my view, should be in that position. No S&P stocks, no 60-40 relationship, 60% in stocks or 40%, because both of those areas, I believe, going forward are going to do poorly. Right. And they will start to reflect the inflation, the intense inflation that we have ingrained in not only the U.S. system, but the worldwide system. And the dollar, being the major currency, has exported inflation to all countries.